Hi guys, I'm Wealth. Welcome to my YouTube channel. So today's video I'm going to be talking about mitigation and confirmation. Yeah. Without further ado, let's let's go direct. Now, speaking of mitigation and confirmation, they are two different things, right? Mitigation is just like it can be defined as a reduction of risk. You get it gets to like when price taps on a PY, and or let me say, how would I put it? You say mitigation is where orders are resting and price intends to fill up that POI or that zone at that moment. So just basically like a reduction of risk. While confirmation is allowing price to mitigate and making sure that that zone is actually an area that you can use to enter your trades. That is the difference between mitigation and confirmation. So basically, what I was trying to say, or what I'm trying to say, is this: assuming you have a structure like this, you have a bullish structure like this, yeah, and price gives us or give us this zone as a demand zone, right? Give us this zone as a demand zone. Now, if price is coming back down here, price is going to mitigate. If this is a strong zone for price is going to mitigate this zone, right? Now, the process that price is coming down to this zone is called the mitigation. Like I said earlier, it's just like market is just tapping on a demand zone, right? So after tapping on a demand zone, the confirmation is to just to be aware, or to make sure that what you are actually trading is what is on the right path or on the right trend. Like this now, assuming this is like a mitigation has already happened here when price tapped on this demand zone, right? So after tapping on the demand zone and you just seamlessly take a trade like that, you are not sure or you don't know if price is still actually going to move and break to the downside or continue to the upside. So that is where confirmation comes in play, where you are actually going to wait for the price to form your entry model or give you reasons why you must enter the trade. So that is the reason why it is called what? Confirmation. Now, in this sense, I'll give you a scenario. I'll give you a scenario about this mitigation and confirmation right now. So now we have this entry model, the one we all know. We have the other block, the inducement. Now, this is an entry model on the higher time frame, say like maybe the 4 hour time frame, right, or the 1 hour time frame. Now, when price comes back to this zone, some people basically tends to do what? Just pick entries like that, like just take the trades like that and set limits, and price just react and do its thing. And some people tends to do what? Wait and confirm if that zone is actually a correct POI, like a valid POI for you to actually enter that trade at the particular moment. You get? So in this case, some people, price tends to do what? Get to this zone, form something like this, um, form something like an inducement again or a liquidity like this, and then price comes back again to this PY and then starts moving. Or in another sense, price decided to do what? Break to the upside like this. Price decided to break to the upside like this, move higher like this. Or okay, let's say price decided to do what? Move like this, swing like this. Yeah. And an expansion happens at this point. So price decided to come back to this zone and then move. Something like a breaker or an expansion entry type. So this is where in this case, we have this POI. This one here that stops here is called the mitigation. And the entry you took here is called what? The confirmation. Making sure that what? That price is actually going to the right direction and making sure that the POI that got mitigated in the first place is actually the right POI or the correct POI. That is the difference between the confirmation and the mitigation. Yes, that's the difference between the two. Now I'm going to show you a chart scenario about these two and you get to know it. Now, quick one here. So I have one on EURUSD. I have one on EURUSD. Now, basically, it's on the 4 hour time frame. Now, one thing you should know sometimes is that when you are actually trying to confirm a structure or a POI that is actually maybe correct or a right POI. Now, assuming I said, like I said earlier, this zone here is actually the 4-hour. This setup here or this entry model is from the 4-hour, right? Now, to confirm this type of entry, you have to scale down to the what? Probably the 30 minutes, 15 minutes, or the 5 minutes, depending on time frame you are. If you are trading, if you are picking zones from the 4-hour, your entries, or confirmations should be around the 30 minutes, the 15 minutes. It should mostly 1 hour. But if you are picking zones from the 1 hour, your entry should be on the 15 minutes and the 5 minutes, and so on like that. So that is how to get it. If you are getting this type of entry like this, if you are getting a mitigation from the higher time frame, which is the 4-hour time frame, and you are trying to confirm, you are sometimes it can really show. Sometimes it can show on the 4-hour time frame that you can see actually enter your trade on the 1-hour time frame. But most cases you should always go to the lower time frame for confirmation, higher time frame for entry, lower time frames for confirmation. That's what they call it. Yeah. So now let me show you what it is on the chart. Now, using USD as an example, now what can you really see? Basically, I am seeing this break of structure here. Yeah, I'm seeing this break of structure here, right? There was a break of structure here. Now, this break of structure left another block beneath, left this other block here. That price did not even come back to mitigate in some time, for some time rather. So now after that, price came back to this other block, mitigated that other block. Now this was the approach I used. Mitigated this other block, then I have to wait for price to react from this zone. When price started reacting from this zone, okay, I can see that okay, this seems to be a strong zone that price can hold at the moment. You get, at the moment, you get. So when I saw this internal range liquidity here, okay, I said okay, fine, this has given me what I want. Now I wait for the mitigation, and the mitigation happened. Now I did not take the trade, this trade. I did not take this trade. I did not took this trade from the 4-hour time frame. What did I do? I went to the 1-hour time frame. I went to the 1-hour time frame like this. Now this is what I did. After you go for the 1-hour time frame, now this is where the entry is going to come in play. You can see that there is literally an other block here, but the other block seems to have been mitigated. Now what did I do? I scaled down to the 45 minutes. For you, everything you just need here is clarity. Everything you need in this is clarity. After this mitigation from the 4-hour time frame, I went straight down to the 45 minutes time frame or the 30 minutes on the 1-hour time frame. So now this is an order block. Now before another block, there was a liquidity grab here or liquidity sweep here, right? So after liquidity sweep, there was another block here. So after the other block here, there was an inducement, because this inducement broke structure. This inducement broke structure above here. And there is a theory that says anywhere an inducement is formed, pick the nearest PY closest to it. Now this is the inducement formed, and this is the nearest PY, which is the other block, and the liquidity sweep. Now this is what happened on the trade. You can just target this eye, here, and price give me, what is that, 5.2 RR. So this is how to get it. 4-hour entry, 1 hour, 45 minutes, or 30 minutes confirmation. This is what I did. On 30 minutes, this other block is clear, but on the 1 hour, it seems not to be clear. So you have to scale lower, like you have to go lower to time frames and check if you are going to see a PY, a clear PY, actually, not just PYs, a clear one that you can actually able to enter at that period. Now you can see, now this was the entry that happened, and price did what? Price bought before price started selling after getting to this zone here. So this is one example. Now another example is actually, let me check. Okay, so another example here should be USDJPY. USDJPY on the, let's start from the 4-hour time frame to check. Okay, so now on the, let's start from the daily. Now on the daily, what can you see on the daily? Yeah, this is actually a bullish trend at the moment. Now there was a break of structure here. Now there was a break here. After this break, you can see price rated up, an expansion happened, and for the fact that an expansion happened in price, it's going to give you what? It's going to give you a breaker. A breaker block is going to be formed at that point. Now there was a mitigation at this zone, right? That is the daily. We have already checked the daily. Now it's time for us to confirm. There was a mitigation on the daily. Now it's time for us to confirm the trend. That is where confirmation comes in play. In that case, you have to wait for trades to form. Wait for setups to form. So that is how you're going to enter trades. Now in this sense, now we are going bullish since the structure is bullish. Alright, so on the 1 hour, you scale lower. That is on the daily. Go to the 1 hour to check. Now you can see there are a series of highs and lows, series of highs and lows happening. Low, high, then the low. Now in this sense, we have series of break of structures. A break of structure here. A break of structure here. Now there was a break of structure here. In this case, after this break of structure, what can you see? We saw I see something like another block here, right? And an inducement. See this small pullback here and an inducement. So the small pullback gave an inducement, and then you can see price mitigation at this point, and price just targets the 5 hour, and price did what? Price shoots up to actually hit TP. You can see. So that is actually the basic term or basic terminologies or analogies in if you want to trade mitigations and confirmations. So that is basically how it is done. You allow price to come into your zone on the higher time frame, then you scale lower to the lower time frame to check for what entries. That is where you have to be patient to trade whenever you trade them. So this is it, guys. This is it. So we have come to the end of this video. So if you are new to this channel, please simply subscribe to my YouTube channel, like the video, and share it so that you can benefit. I wish you guys, and I'll see you in the next video.